Hello, everybody. Welcome to the US Session Brief. We're on Monday, the 8th of May, 2023. The Senior Loan Officer Survey is set to be released today, and it's a report everyone's been waiting for to see how tight lending conditions have become with the banks. While we're done with the biggest market cap companies reporting earnings, we still have a busy week of earnings ahead of us. We also have the US CPI on Tuesday, the PPIs on Thursday, and also UK GDP numbers on Friday. US markets are seen slightly higher so far today. The dollar and bonds are seeing a little bit of downside pressure. Bitcoin has taken a small hit today, falling below 28k on news that Binance, the biggest BTC exchange, had stopped withdrawals. Withdrawals have now been resumed, but there's still speculation of trouble with the company. Let's wrap up what we've seen in the trade so far across the world, starting with Asia and Australia. Asian markets traded mostly higher. Japan shares set to close lower as it marks to market post last week's holiday. Strong day in Australia, South Korea and Taiwan. No major surprises from the BOJ meeting minutes. March BOJ minutes indicated thoughts that market distortions remained tough and did not worsen. In Europe, European equities high today after finishing last week with mild losses. It must be said that the UK is closed for coronation of King Charles III. Public holiday, energy, healthcare and banks have been leading. Real estate, telecom and utilities lagging. No market moving news over the weekend. ECB's not said on Sunday. He's not sure how high Eurozone rates will have to go. Credit Suisse's demise isn't deterring hedge funds from EU bank bonds. While in the Americas, President Biden is set to meet Speaker McCarthy today to discuss raising the debt ceiling. The GOP wants promises of cutbacks of government spending, but the Biden administration wants a clean raise without conditions. 43 Senate Republicans say they will oppose any bill that only raises the debt ceiling. FDIC is considering whether to offer loss-sharing agreements to private equity firms and other non-banks that acquire parts of failed lenders. Pretty much it from a news perspective. Today on the calendar we have pretty much nothing. We've got PayPal reporting, KKR reporting. It's probably the highlights. So where are we at technically? Let's focus on that. Gold had a pretty interesting week, put it that way, last week. How have we started the week? Well, we are slowly ticking higher. Within all that volatility though, there were some pretty key levels respected. Of course, you've got the overhead 2075 all-time high. We knew that already. But then downside, we reversed and bounced off the 2000 handle. So from 2075 down to 2000, both key technical levels that we've had on these charts, psychological as well as technical really, but both playing out quite nicely. And you've seen that bounce off 2000 and we're trading at 2023. Again, just a little bit steady so far after that rather monstrous move last week. Speaking of monstrous moves, oil certainly had one last week to the downside. Fears of recession, poor Chinese data, all adding into the mix. Obviously, the banking issues in the US too. Just everything had said, okay, well, we don't want to be holding oil because demand might be dropping. Everything just got smashed. And to be honest, I think a lot of this was big liquidations. For me, there was a bit of a flash crash on I think it was Thursday last week. We dropped more than I think it was 300 points within 5 minutes. Flash crash if I've ever seen one. But we're now bouncing off those lows. You can see the double bottom in play and back at 73.30. So just incredible whipsawing of the market there. Sometimes when you see this move, you think, okay, breakout, I'm going to trade with the breakout, and then you end up selling down here, and then the market just whips you up like you wouldn't believe, especially on crude with the volatility it can generate. Dollar yen is currently traveling at 134.99, so pretty much at that 135 level. Again, some key technicals on this market playing out nicely. You had the textbook fade of the breakout last week, so false breakout, faded back lower, back into our 133.50 handle. That's our support level. And then back into 135.30. So some of these horizontal levels really being respected at the minute on the dollar yen. So I encourage you to check those out because we do seem to be enjoying trading with them at the minute. The SPX is still traveling to the upside, you must be said, because we are continuing to hold on to the long-term ascending trend line. You can see last week wasn't pretty until Friday. NFP report came through, and markets seemed to like it. It was a hot report on everything, but markets went, okay, we're having it. Apple earnings came through, and markets seemed to enjoy that as well. So in the end, we ended up closing higher, which is a trade which we probably wouldn't have seen in the past 12 months. So it's just quite interesting. Of course, the Fed came out and delivered the message, and it was a relatively hawkish message, but also the fact that they said, okay, well, we're stopping hiking. So that Friday move is like the market's saying, okay, well, the Fed have said they're stopping. They're stopping. It doesn't matter if we get hotter than expected NFP reports. That's a good thing. The economy is doing well, and there's going to be no recession. So that's kind of the reaction that we've seen. And in the past 12 months, maybe you would have seen the opposite, because it would have been hot report, hot average hourly earnings, all that kind of stuff, and it would have been, okay, well, that's the Fed going even harder at the next meeting. But now, because Powell said he's not going, said that this is likely the end to the hiking cycle, and they've already gone very fast with their hikes too, then markets kind of enjoyed the fact that it's good for the economy. And then Apple earnings came through good, and yeah, we just had a joyous Friday. We're starting off rather joyous too on our Monday, and you can see here we are already testing the highs from Friday. Let's see if we can get through there, because then we're again coming up against that all-important area of 4160 to 4170, and once again, I'm expecting quite a big battle when we do get there. So that's it from my end. I'll see you all inside the chat room. Thanks for listening. Have a great day trading. Bye for now.